I'm looking at a PDF that you can get through Forex Trendy, and I've linked to it below. So if you click below, you can actually download this PDF for free. And if you're interested in Forex Trendy, there's the links throughout the PDF. You can just click. The reason I'm talking about this today is because in an earlier video, I had made a comment that someone had given wrong information about trend drawdown, and I'll talk about that in a second. Basically, they had said that trend drawdown in Forex Trendy indicates a percentage of a chance of something that's going to happen. And I can't remember exactly how they phrased it, whether it was going to be a reversal in trend or something. I can't remember, but whatever it was, it was wrong. And basically, what they're talking about in Forex Trendy is it's pure price action, which is the best, right? Anything else is a derivative price. It tells you how deep the price went against the current trend. And you'll appreciate this method in the next paragraph called protecting against volatility. So what they're talking about here is these moves down here. And this blue line indicates the deepest move against a trend. In this example is 233 pips, right? The whole move in this chart, 882 pips. So they do a division and they get that trend drawdown percentage. Look at the charts here, Euro US dollar forward chart. This is in the live members area of the Forex Trendy. You can see that this is telling you 133 pips is this pull down right here. So how can you use that information? Well, we can expect that a 133 pip pullback is totally in the realm of possibility in this current uptrend, because what did not happen? Even though this pullback was deep, we still went up in price. Right? So it's going to take more than a 133 pip pullback to be going against the overall trend, and perhaps we're going to see a trend change. And how can you use this in trading? Well, if you're traded the Euro US dollar, and let's say you went long in this area right here, and you did what a lot of other traders do, which is just place their stop below support, nice and tight, and then price takes off, right? Generally what we've seen happen, and I know we've all been a part of this, we place our order, price comes down, takes us out, and rockets up, because people are undercapitalized in trading. So they want to have their stops nice and tight so they can take advantage of a higher position size. I don't use just putting it underneath lows. That doesn't make any sense to me. I use more of a volatility base, which is ATR, times 1.5, times 2, depends on the trade. And you can also use trend drawdown. So if you went long anywhere in here, make sure your risk is in line with a 133 pip pullback. All right. And going back to the PDF, this is how they talk about it. And they said the lower trend drawdown, the more reliable trend. And that's accurate to a point. We don't want to see pullbacks start to violate areas like this. So if this price come on going, start taking out highs, then we got a problem, right? Then we're going to start changing the whole higher high, higher low. That's what we're going to head into, which this is a downtrend, but higher high, higher low is an uptrend. All right. So if you actually traded this, now don't get all freaked out by that. It's a different currency pair. Most people never trade that. Look here, 119 pips, 70 pips. So in the PDF, what they're talking about, here we go, stop loss, mistake. A lot of traders do this, right? Right after entering the market, it's too quick. It gets hit and price goes on. Remember, markets seek order flow, and they know, markets don't know, but traders know that majority of traders out there are going to place it just beyond the highs and lows. All right. So, and it also talks here, this is a great point, is people using a fixed number of pips for their stop. And that does not take into account this market volatility. And that's why I'm a big fan of ATR stops. Okay. So I wanted to cover that, but there's something else that I want to talk about. And it's something that I've traded forever, basically. We see all these pullbacks, right? And I want you to look at a chart like this. Just looking at these pullbacks. Okay. Let's go to a chart. There's something out there called Symmetry. And it's something that I've always been a huge fan of, especially when you want to look for confluence in the market. So let's say we're looking to get long the Aussie yen. That's what this currency pair is. Well, remember, when we're in a trending environment, there's a rhythm to the market, right? And just like we talked about with the Forex Trendy drawdown, these pullbacks you will find oftentimes will land in the same general area as previous pullbacks. So let's take a look, and let's say we want to get involved in this uptrend. Obviously, we put in a low here. This is the lowest low, and then we started moving upwards. Obviously, there's a bit of a range here, so it's a little bit different. What we're looking at is where can we get involved. Now, if you're trading this, we don't know this is going to happen, so we would look. Here's our lowest low, and we can look at swings going right into the low. So we get our little Fibonacci tool, right? And we start measuring. So let's say I want to get involved here. I would go from this low, this high, to the lowest low, and to this high. And you'll see that we fall in line right about here. Okay, so it's, again, just like support and resistance. These are areas, right? A lot of times they're going to bounce right off, but sometimes they won't. So let's go move this up here. We see we get in this trade here, comes back down, pulls back into this area right here. What we're measuring is the current, the swings, and projecting past swings onto current swings. Okay, so let's look over here. Let's say this pullback here. Now we're getting to a trend. We've broken out of this range. So we start looking at like this. Okay, we go like this. And we see we came right down into that area right there. So now we're going to keep trading, right? Now we're long. Now we look at this pullback here. We're going to just move this one up here. And again, it's coming into the same area, right? Over here. Same thing, same area. And you can actually, and you want to, draw a few of them. Obviously, you want to check out the ones that they're obvious to your eyes. If you're searching for them, they're not there. Again, pretty close, right? And this one's actually, if you look at this pullback here, this one here is exactly the same as the other one that we just measured. This one, let me just clear it up here. There we go. So you notice this swing down here is the same as this swing down because we projected this one from here. So what you're doing as a trader is you're going to look at this level as price is pulling back, and confluence is what you want to see, right? Whatever you look at for confluence, maybe you're just looking at an upsloping trend line. Price is pulling back. It's coming to this area here. It's got this area here. I'm not a really big fan of Fibonacci retracements at all, but you're useful, I guess. And you'd have, some confluence at 3.82, so 38.2% pullback, the 100% symmetry of previous swings, and a trend line, right? You can look at it that way. So let's wrap it up here. So what are we looking for? We're looking at a move. Let's just move out of this chart here. Let's move over here. Let's just go here. Just an idea. I just scroll through. Well, you can see our low is here. This is the last swing down into this low. It's pretty big, right? And then we got all these different swings. Again, you're looking at more of a range in through here. But we can actually just go from here. Whoops, that's the wrong tool. We're looking for that 3-point tool is what you want to use. And you see we're miles away, right? This is obviously there's probably a news release in through here. Something had happened. Let's go to something that looks a bit more normal. And interesting enough, this big swing here, actually, this spike down actually hits the same zone. So you're looking at trades into that as well. So you can see that it's an extremely valid way of trading, and it's something that you may want to add to your trading repertoire. And again, they're not always going to be perfect. But they're just giving you zones, right? Zones of opportunity, and that's what you want to be trading. If that makes any sense. Hope it does. Let's just grab one more pair. I'll grab that KY, maybe just GPP. There we go, CHF. Yeah, that was actually a really nice trade, that channel trade, but let's get rid of that. Don't need that. Again, let's just say we're looking to get involved in this move. We don't obviously know this has happened. So we're looking through here. Not really there's a big swing here, right? You could take that, but it's massive. And even these little candles, you see this black candle, but then we got this lighter candle here. That's actually a retrace on a lower time frame. Whenever you see these wicks, think about this. Price pulls down, right? There's a bit of a pullback, and it goes down again. So even though you don't see pullbacks always on the higher time frames, you can just infer them from the candlesticks instead of having to always drop down. So let's just take a look here. So there you go. This comes back into this area right here. Let's move this up. Comes down, spikes into this area right here. Again, it's just giving you zones to watch for trades. Again, it's in the same area. And then you could just do a whole bunch of them. Measure every single swing. And that's what you could do. What I generally do is I'll measure the. You see, we got a confluence of swings right here. I'll measure most of them actually. If it's a real swing, I'll measure them, and I think it's a great way of trading. Just adding a little bit more, but again, at the end of the day, what rules? Price action rules. When you see these kind of things happening, especially in the context of a range, great trades usually come of those. Don't ignore that this is an arrow. You can see it pops down. So if you're looking for a price action entry into pullback trades, these were great. Look for some basing. Anyways, let's wrap this video up. That's what I'm going to talk about. Click below. You can download that PDF for free. Let me know what you think.